Hey guys, Jared Wesley here of Live Traders, and I've been getting a lot of requests recently to do some trade reviews on trades that I've recently taken, and I don't mind doing trade reviews. I've been a little hesitant to do it, mainly just because it takes so long to cut up and edit and chop up these videos. You take like 2 hours of video and cut it down to like 2 minutes. And it's just a lot of slicing and stuff. It's not hard, it's just time consuming, so I've been kind of putting it off, but I decided I'm going to kind of get back into that groove. So in addition to the Wednesday lectures, I think I'm going to try at least 2 to 4 times a month to get these trade reviews out. I'm hopeful that I'll get one a week out. But anyway, this week, guys, I want to go over Tesla, YQ, and Microsoft. Those are 3 trades that I took this past week. All of them happen to be 3-bar plays. One of them is a super 3-bar play. Tesla and YQ I took today, although by the time this video hits, it'll probably be a few days after that. Microsoft, I believe, was last week on Wednesday or Thursday, but nonetheless, that's not the point. It's more about learning, all right? So if we take a look, for example, with Microsoft, and we're going to get to the video of me actually taking these trades as well so you can see my P&L, et cetera, and so forth. But if you take a look at Microsoft, we have a daily chart where the stock gaps up over an all-time high, which I believe was right around 232.80, but it gaps up over that prior pivot, it gaps up over the previous day's topping tail, and then that's what we're left with. So that's the pre-market gap, and you sit there and go, okay, well, this is an interesting gap. The market was gapping up as well, so you're hopeful and you're thinking to yourself, well, if the market can push higher today, which it's been doing a lot recently, then perhaps Microsoft will also push higher. So ultimately what we did on this trade, and again, you'll see the actual trade here in a little bit, is this stock put in a 2-minute 3-bar play. So it gaps up, it gets right around the all-time high area of 232.80, and then it puts in a 3-bar play. So the first bar of the day was a wide range green bar. You can see that on the screen. The second bar was a narrow range resting bar. So far you're thinking, sweet, we have everything we want. We put our order in to take the trade, and you're hopeful, and you're thinking, all right, this is a good looking pattern, and then bam.
No!
It
God,
tanked.
please,
It stopped
no!
out in about 30 seconds. One of the fastest stop outs I've had in a while on Microsoft. And you can kind of take a look, right? So now you see that it stopped out. I lost $900, give or take, on this trade. And again, you'll see that in a few minutes here in real time. But if we kind of roll it back a little bit, you can see, even though the daily was interesting, what was a concern was the 15 and 60-minute chart from the previous day. So even on the 2-minute chart, right? Notice when the 3-bar play was about to trigger. If we include yesterday, it was up quite a few bars, right? It was up 6, 7, 10 bars in a row, and then the wide range igniting bar happened, and then the narrow range resting bar, it peekabooed over by 15, 20 cents, and then immediately stopped us out. But one of the things I want you guys to take from this, and I've done lectures on this, so this isn't something new, is if you do think you took a good trade, okay, especially on the daily chart, it's timed well with the market, and then on top of it, you have a good 3-bar play or buy setup or breakout or whatever the pattern is, you feel like, you know what, I did a good job here. You should absolutely consider getting back in. And this is the case on Microsoft. We got back in on the 84% trade. And the 84% trade didn't quite hit our full target, but it hit our partial target. So instead of losing $900, I think I ended up losing $300 total on Microsoft between 2 trades. So I didn't get all of my money back on Microsoft, but I got most of it back. And again, I've done a lecture on the 84% rule. It's a really, really powerful thing. But I will say this, please, please, please back test it before you go out and use it. Don't just take my word for it because I said it's a good trade or a good concept. It is a good concept, but it may not work 84% of the time on your trades as it does on mine. In fact, I'm going to put on the screen here real quick. So far in January, I believe there's been about 13 84% trades. That means stocks that stopped out initially and then re-triggered the entry later on. Again, I have a video on it. I'll link it in there so you can see it. But you'll notice of those 13 trades, it made about 8R, 8.2R. That's incredible. So that's another 5 to 8R during the month that if you didn't get back in, that's money you would not have gotten, meaning so you would have lost that money and never regained any of it. So if you had gotten back in using the 84% rule, guess what you get? You get 8R back. which may have been 30-40% of your month, which is a huge deal. So definitely do yourself a favor and go back test the 84% rule, because many of you are going, I don't even know what that is, Jared. I know. Go look up the video. Go do some homework, right? Next, and these were this morning actually, on Tesla and YQ. So as we know, Tesla gapped down a couple days ago on earnings, and today it had an interesting gap up. I was mainly interested in Tesla on the 60-minute chart and the 15-minute chart, not so much on the daily. But what did Tesla do? It ultimately gave us a very aggressive 1-minute 3-bar play 2 to 3 minutes into the day. And I'll be honest with you guys, I don't normally like to be that aggressive off the open on a 1-minute chart, especially in an $800 stock like Tesla. So the 3-bar play gave us an entry right around 814. But one of the things I did differently here, instead of using the low of bar number 2 as my stop loss, I used the low of the day. Okay, and why would I do this at 8:30 or 9:32 or 9:33 in the morning? Why would I do that? Because Tesla is a very spready, very whippy stock at any time of the day, but especially and particularly in the first 3 to 5 minutes of the day. So instead of using a tight $3 stop loss, I used the low of the day, which ended up being about a $6 stop loss. So I basically used 814 as an entry and 808, give or take 808.50, somewhere around there as my stop loss. And you know what Tesla did? It went right up almost to the penny. It went 2R, all right? Just barely. If you used 808.50, it did go 2R. If you used 808, it just missed 2R. So I ended up getting about $900 to $1,000 out of Tesla. That happened in about 3 minutes, 2 or 3 minutes for $900 to $1,000 on Tesla. Textbook wide bar, narrow bar rip on the 3-bar play. But again, the caveat here is I used the low of the day as the stop loss, not the low of bar 2, because it was so spready and whippy and because it was so early in the day. And you might want to consider that, because I see a lot of traders taking nasty slippage because they use a stop loss that is far too tight. And then the last trade I took, guys, was YQ. And what's interesting about this trade is YQ was actually on my short list this morning. It had a decent gap down, but then something crazy happened. Not really crazy, but interesting, right? YQ immediately in the first bar of the day went red. That's not unusual. It's a gap down. You're thinking, oh, well, that's what it's supposed to do, right? So the market goes lower and YQ goes lower. But then immediately after YQ went lower, it put in a wide range green, bullish, green engulfing bar that took out the red bar. So on a 2-minute chart, it had a wide range red bar followed by a wide range green bar. So we immediately have a turnaround play here. Okay, now these are a little bit more aggressive on a gap down. Okay, but then also something interesting happened. The market started to pull back and YQ didn't. It started to consolidate out on the 1-minute chart for a couple minutes, and then ultimately the 2-minute chart gave us what we call a super 3-bar play. It's one of my favorite patterns that we teach here at LiveTraders. Of all the patterns that we teach, 10, 20 patterns, this is probably my single favorite. Not always on a gap down, but on a gap up, having a wide bar get completely engulfed, followed by a narrow range resting bar. So we have a super 3-bar play, okay? This ended up being a really pretty, beautiful trade that happened quick. I mean, we got in at $14. The stop loss was $13.75. I missed share size. I wanted to get 4,000 shares of this. I only got 3,000 shares of it. It popped up 78 cents in about 5 to 6 minutes. So I was out quick with about a $600 or $700 gain. Not what I was hoping for. I made 2 mistakes on this trade, to be honest with you. I should have had 4,000 shares instead of 3,000 shares. And on top of that, I also double-clicked my mouse button. I had 1,000 shares in a box. I wanted to sell 1,000 for some profit, and I sold 2,000 by accident. So ultimately, I made like $650 on a trade I should have made over 1,000 on. So you can see the little quirks we have in trading, guys. Sometimes we make honest mistakes. Sometimes we make dumb, boneheaded mistakes, and other times it's not even our fault. Sometimes your platform locks up. We've seen a lot of that lately with the GME and the AMC. TD Ameritrade, Robinhood, Webull, etc. are all locking up because the volume they just can't handle. So we overcome a lot of obstacles as traders to be good traders. But the one thing I wanted you guys to see with this review was all 3 were roughly the same. They were 3-bar plays, but they're all a little different. One was on a gap down, and it ended up being a really good trade because of the relative strength. Another one was on a gap up, but it was on a 1-minute chart that was really aggressive. and we used a wider stop because of the aggressiveness. And the other one was on a 2-minute chart that there wasn't a whole lot wrong with, except for, again, a little bit extended before it triggered. And then what happened? It stopped out. So not every trade works, and that's the whole purpose of showing this. These are 3 3-bar plays, a little bit different types of 3-bar plays, but all decent 3-bar plays, and 2 of them worked and 1 of them didn't. You're not going to win every trade, guys. All right, and this is what bothers me when people say technical analysis doesn't work, there's no edge. There absolutely is an edge in technical analysis, and maybe I'll do a video on why technical analysis works and why it works so damn well. But it doesn't have to, and here's the beauty, it doesn't have to work 100% of the time. It can work 40 or 50% of the time, and you're still going to make money if you're a good trade manager. Okay, that's the one thing I see people doing here. They don't use stop losses, they have terrible money management, and they're terrible trade managers. Don't be like that. All right, so here in a second, guys, we're going to get into the video so you can actually see my actual fills. I won't talk through the trade quite as much as I just did because I don't want to make the video too long. But anyway, I hope you guys enjoy these trade reviews. If you have questions on certain trades you'd like me to review, you can certainly send me an email at Jared, J-A-R-E-D, @livetraders.com. Don't put it in the comments below because I won't read or see all of the comments. But as always, guys, if you do like this video, please click that like button. Please smash that subscribe button. And also, don't forget those click notifications, that little bell. You have to click that, guys. You got to click that bell. All right, if you don't click that bell, then you're not going to get the emails when these videos drop, all right? And they're pretty awesome videos, and you can learn a lot from them to become a better trader, not a lot of that charlatan, furu type stuff that's out there. All right, so I'm Jared Wesley of Live Traders. Let's quickly get into this and see how those trades went. Next is Microsoft, MSFT. It's interesting. The thing I don't like about it is the fact that it moved up so much yesterday, right? So point being is Microsoft looks a lot like the Qs. Well, what's our call on the Qs today? Our call on the Qs today is choppy bullish choppy. Well, that could be Microsoft. So the only thing we have to see here or look for is Microsoft going to show relative strength to the market today? That's it. Because the gap itself is mediocre. Yes, it's an all-time high once it gets over 236.86. But what will it do? How will it get there, so to speak? So volume range, all that's fine. We'll just have to wait and see how it compares to the market. Guys, Microsoft and Ride. Watch Microsoft. Guys, Microsoft is the nicest thing I see right here. See Microsoft, guys? I'm a little worried about yesterday's bar, but 232.83. All right. I want to watch Microsoft, guys. All right, I'm out Tesla, guys. Guys, whoops. Let's watch Microsoft. 232.82 by 232.16. Microsoft, 232.83 by 232.15. Okay? MSFT. $0.70 stop, guys. 70-cent stop. Got to get over 233 on Microsoft, guys. Right there. See if we can get over that area. Don't like that. Wow. That was fun on Microsoft. Holy shit, wow. All right, out Microsoft. That was fun. Haven't had that happen in a while. Haven't had that happen in a while. Watch Microsoft for an 84% rule, guys. Watch Microsoft for an 84% rule play. Okay?
Computers came in and they shook us out. That's what happened. I mean, plain and simple. I mean, part of that could be the Qs, going lower here. Tesla. Didn't you miss Tesla on Friday not being on the gap list? I know you did, so I put it on today just in case you guys were having like Tesla withdrawal syndrome. Gapping up to 815, which is about 50% give or take into Friday's red bar. So Tesla sold off on Friday. Went from 842 to 780. Pretty big move. $62 move is a pretty big move even for Tesla. And this honestly is a little bit of a dangerous line in the sand for Tesla. If you get under 700 or 800, which we talked about, Tesla's got a lot of room to drop at least to 600. So today we'll wait and see. I think it goes higher today. We have room back to 845, which is about $30. But hey, Tesla could pull back today. Pretty good volume. Obviously good range, so we'll keep an eye on it and let's see what happens with it. I do really like Tesla, one of my top watches, but again, this thing's been a real pain in the neck to trade. It would be a $6 stop loss, like 814 by 808. So, just be mindful of that, guys. All right, on Tesla, we have a 1 minute 3-bar play, but this thing has not been the easiest thing to trade. YQ lower, NNOX lower. Here goes Tesla. Do we want to jump in early on Tesla? I don't know, right? Topping tail in the market. Guys, I'm gonna give Tesla a shot. All right. Tesla, guys. All right, Tesla, 814 by 808. This is a little bit aggressive. Considering how Tesla has been trading. All right. $6 stop loss, guys, on Tesla, which means we need 820 for break even. Okay. I know this thing isn't everybody's cup of tea to trade. I get it. Okay. Let's see. All right, guys, Tesla stop break even. That's close enough for me. Tesla stop break even. Okay. Tesla stop break even. Tesla stop break even. All right, guys, I'm out Tesla. 1R there, okay? I'm out Tesla. Guys, YQ is looking higher. I don't know if I trust it, right? Look at YQ at $14, guys. Watch YQ over 14. It's got a spread, all right? But look at YQ. Look at YQ. You could probably do this with a 25-cent stop loss, all right? Very, very tempting on YQ. Guys, I'm gonna nibble YQ. All right, YQ, guys, 14. That was a great pop on YQ, guys. Stop should be break even on this thing. Come on, pop. Stop break even YQ, guys. Stop break even YQ. Stop break even YQ. All right, shit. I just double clicked the button by accident. I'm out YQ.
So guys, this was honestly one of the worst managed trades I've had in a very long time. Most of the time I risk about $1,000 per trade, and I try to get somewhere around $1,200 to $1,500 out of them. And if I get anything over $1,000, I'm pretty pleased with that because I don't take a lot of full stop outs. Most of my losers are $300, $400, $500. So on YQ, I started with too small of a risk. I took 3,000 shares. I should have had 4,000 shares. The initial pop was really, really good, but I couldn't get any off on the initial pop. So I got a little bit nervous and took some off for a 10-cent gain, which is just terrible. So I poorly managed this trade. And you have to be careful about that because I gave up probably $700 or $800 on this, and that's in about a 2-minute period. You know what I mean? So that's a good amount of money to give up in a 1 or a 2-minute period. So you have to be on your game at all times. I hope you guys enjoyed the review on Microsoft, Tesla, and YQ. I'll try to get more of these out to you guys each week. I'm Jared Wesley of Live Traders. I'll see you guys again next week.